Most traders overcomplicate things. They have a crazy amount of indicators, patterns, and theories, and they still miss the important entry points. My setup, it's just 3 candles. Is it lazy? I don't think so. I think it's actually deadly. Keeping it simple. Once you understand how candles work, you're never going to be able to unsee this. Now, before we get into this trade, I want to emphasize something. I want you to copy what I'm doing here, but I want you to copy what I'm teaching you in the process. I do not want you to copy my trades. I want you to be able to go fishing on your own and have a skill that you can use for the rest of your life. So let's go over the chart and let's get started here. So this is a trade that it's one of my 3 stocks that I trade religiously. And this is one that I had a really great run on over the last couple of weeks. I made 10+% in a certain number of days, and I'm eyeing it again. So this is ONDS Holdings, ONDS. And you might be asking, what is that? I don't know. That is something very important here. You can trade anything. You can trade commodities, you can trade crypto, you can trade equities. It doesn't matter. All we're looking for is the pattern. So what was I looking for here? Well, you can see over time, this thing went on quite an incredible run. It really wasn't doing a lot, and then it spiked way up, and then it started to come all the way back down. And this back down part is what interests me. Why? Stocks fall faster than they go up. In some cases, this one seems to have gone up pretty quickly, but stocks tend to fall faster than they go up. So when I see something that goes for a crazy, crazy run, I start saying, okay, I need to start looking for buy signals, engulfing candlesticks. But first, we're going to look down here. We look at our trend. The trend is something that dictates everything on a trade. Every single time I open up a chart, my eyes go directly right over here to the trend. And we can see that we had a trend pointing in the down direction. It's very obvious. That's all you need to know right there. We had our red line, which is our leading indicator, below our yellow line, coming in the down direction. We know that the stock is going to fall. How much? We don't know. In what fashion? We don't know. But we know that it's going to fall. Next, we look at our volume. How many shares are being bought and sold? And are those shares, are more being bought, are more being sold? That is a very important thing to look at. And in this case, we know that there are more being sold because we had a lot of red in here. Red means more selling during the day. Green means more buying during the day. Off of this high, you can see that we had a lot more selling during the day. Now, the simple strategy. When we come down here and we look and say, okay, our trend is going in the right direction. We have an engulfing, we have volume that is pushing down, downward pressure, meaning what? Meaning we're likely going to get an engulfing candlestick. Now let's talk about the different types of candlesticks before we talk about the engulfing. So there's a lot of different candles here. You see some have these long wicks on them. You see some have these full bodies on them. You see some here, like this one, not really a whole lot. This one right here, this is probably your most common candlestick. It's called a doji. Nothing happening. Starts the day right here at this horizontal line, goes up in price, goes down in price, closes the day right in the middle. The majority of days in the stock market on any stock, maybe not so much nowadays because we have such volatility, but normally stocks shouldn't move that much. Think about it. Should a company's value change drastically in a day? No, not really. Companies' values don't change day to day unless something crazy happens, and it shouldn't be an everyday thing. So why would this means that your doji candle is going to be the most common candlestick that you see. Next, we see some of them that are like this one right here. These are called hammer formations. These typically will indicate a change in direction. So what happens? The stock price opens the day right here. It comes down, and then what happens? It goes right back up, and it closes the day up here, leaving what looks like a hammer, right? And hammers typically give you a change in direction. And just like this one came down, you got a change in direction. Here's an inverse hammer, meaning that stock price starts the day here, runs up, comes back down. So it looks like an inverse hammer. Typically will mean change in direction the other way. These are all just different little indicators of which way stocks are going to go. Does it work all the time? No, it doesn't work all the time. But we don't look for things that work all the time. Nothing is for certain in trading. We're looking at probabilities. We want to give ourselves the highest probability to make money. Nothing in trading is certain. And if you think that you're going to come in and make money every single trade, it's not going to happen. The only person that's ever done that is Bernie Madoff, and you saw how that ended. You have to accept that you are going to lose, but you're going to lose less because you have these stops in place. Now, let's go to the most important candle, which is the engulfing candlestick or the buy signal. So this right here would be an engulfing candlestick. And I'm going to tell you, I did not buy this day. And you might be saying, well, why didn't you buy that day? You just said that if you get an engulfing candlestick, it's a buy signal. True, it is. If we pull up these whiskers here, like this, you can see, look where our stochastic was. We were trending down, but we didn't have that true downward trajectory where the red line is separated from the yellow line. So just because you get a candle that looks like this doesn't mean that you execute the trade. This one, for example, there was really no reason to execute this trade, really no reason here. Now, why do we call them engulfing candles? Because you can tell they're bigger and thicker than the previous candles, right? Well, let me show you here. This was your previous day. You have a thick candle, meaning that you opened the day here, you ran all the way down, you had a little bit of a wick here, and you closed the day right here. So you took out the low price of the previous day. Now this was my add point. Why? Same thing. Opened the day here, ran down, closed down here, took out the previous day with a big full body. Notice you didn't have any long wicks on them. Wicks mean that if you have something like this, for example, like the doji, you started the day here at, let's call it 1060. You ran up to 1201, you ran down during the day to 923, and then you close the day back here at 1060. That's what gives you a doji. This, however, you open the day here at 962, you ran down to about 793, closed at 819, way off of the high, way belower than the high of the day, which was 962, 960, what have you. These are the types of candles that you look for. Now, you might be saying, okay, you sold short here, you're making money on the way down, where's your exit point? That is something very, very common I hear from a lot of people. Where do you exit? How do you know when to exit? Well, this is pretty easy. If you trust your trend and you follow your trend. This was the first day. Second day, wasn't a buy signal, but no reason to exit. Next day, no reason to exit. Next day, no reason to exit. Following day, kind of a reason to exit, but really no reason to exit. You'll notice that the stock price hit this yellow line, this long yellow line. What is that? That's the 50-day moving average. So it's the average price of the stock over the last 50 days. Now, what does that mean? It means that it is a strong support level. So moving averages play a role as support and resistance, meaning that if the stock is coming down, it's going to hold it up as a support level. And if the stock price is going back up, like it is right now, you can see here, yesterday it ran into the 50, and what happened? Now it's back below the 50. These moving averages play a really strong role of support down here and resistance when your stock price is going up. So we knew that we were coming down into a 50-day moving average. Now, what else was happening? We were all the way down here on our stochastic. So this area here, between here, right where we entered, this is the sweet spot. It gives us the highest probability, there's that word again, the highest probability to make money. And that's exactly what happened. It gave us a high probability to make money. Stock was moving down, Then you saw the trend starting to change. And what else did you see on this day right here? Well, you saw your first day of green. What is green? It means there's more buyers in the market than sellers for this individual stock. Why might you see that? Because the algorithms and people are noticing what? You're stuck on the 50-day moving average. It goes back to that that support level. This would be my exit right here. One of those 2 days would be my exit. If you're ultra conservative, this could have been your exit because you know you're at the 50. If you wanted to try to run it a little bit more, maybe you lost a little bit of your profits. But either way, you knew that you had to exit. Why? Your trend was rolling back in this direction. And that is how you would execute one of these trades, using candles. So candles are so important, but you need to be aware that it's not just the candle. It's the trend, it's the volume, and it's the candle. If you have those three indicators, you do this for a very long period of time. Not every trade is going to work, but if you do this trade 100 times a year, you're going to do very well long term. Now, you might be saying, You mentioned earlier in the video that you have never heard of this stock. And how did you find it? Because one of the challenges for me, and I'm talking as you, is how do I find stocks? It's so hard. I mean, I hear so much in my ear from the news and what's on X. Well, I don't know where to start. I got this stock from our Patreon community. I generally don't screen for stocks anymore. Why? Because the community is so good at screening for stocks. If you look over here to the right side of my screen, this is Carnival Cruise. It's a stock that I'm actively in right now. This is Cleveland Cliffs. It's a stock that I'm actively in right now. This one I am not in at the moment, but these are my top 3 stocks. I trade these stocks in and out regularly on a weekly basis, and I thoroughly enjoy it. Why? Because they're very volatile, but they're not crazy volatile. They're not like an NVIDIA or something like that. But also, I have the community to bounce these ideas off of. So if you're sitting out there and you've never traded before in your life, and what I said to you was a little bit confusing, trust me, we were all in your shoes. But we have each other in the Patreon community. The link is in the description below. Click it. Give it a shot. Give it a shot for a month or 2. Think about it. What do you have to lose? Learn a skill that you are going to have for the rest of your life. Now, if you want to see more on these types of swing trades, I created an entire course. It's chaptered. It's every single thing that you need to know to get started with swing trading. Check it out, and I'll see you on the Patreon.